Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning, but the good part is that the global cues are looking fairly positive after yesterday's bloodbath on Dalal Street. Quite a few factors have turned in our favor when you look at the Wall Street close last night, when you look at oil prices, when you look at US yields, and of course when you look at the GIFT Nifty as well. So we will be talking about all these cues over the next 30 minutes. We'll also be talking about all the stocks in focus this morning, and of course we'll also be taking up all your stock related queries with our technical expert on the show. But as usual, before we do that, let's take a look at the top headlines at this hour. Wall Street ends higher even as key indices are on track to register the worst month in 2023. US bond yields come off 15-year highs, while the revised GDP data indicates that the US economy grew in line with estimates in the second quarter at 2.1%. Asian markets trudge higher on positive cues from Wall Street. The GIFT Nifty, as I mentioned, is also implying a higher start for the Indian markets as it trades around that 19,650 mark. Oil prices eased from one-year highs. Brent settles around that $95 per barrel mark after hitting $97 in yesterday's session. Among stocks and news this morning, we have Chola Investment Finance launching a 2,000 crore rupee QIP. Meanwhile, ahead of its planned shift to a new trading platform on the 3rd of October, the SEBI has asked MCX to keep the rollout in abeyance as writ petitions over the new trading platform remain pending before the High Court. And NSE index changes come into effect from today. Stocks like TVS Motor, PNB and Power Grid are likely to see inflows. Meanwhile, after its inclusion in the JP Morgan Emerging Bond Index, India still remains on the watch list to be included in the FTSE Bond Index. Well, without any delay, let me bring on board our technical expert for today. Joining me is Kunal Rambhia of the Streets. Good morning, Kunal. Great to have you on the show as usual. Looking at the setup, yesterday, of course, we broke below that 19,500 mark. And this morning, if you look at the cues, Wall Street had a positive close. You have US yields coming off. You have crude prices easing. So all the pain points have kind of eased off this morning. And looking at the GIFT Nifty, 19,650 is where it's trading at. So basis these factors, do you think we are in for a positive start to the October series?
Very good morning, Nandita. Thank you for having me on the show. So if you look at the Nifty, this entire month of September, we saw 11 days from where, Nifty went up from 19,250 to almost 20,250. And in the last 8 sessions, we saw a massive decline and we are back to 19,500. So excluding this 1 month, if you look at the overall trend of the market, it is still positive and it's making clear higher top, higher bottom on the charts. As far as the Nifty is concerned and Bank Nifty is concerned, again, the trend from month of May till now remains positive. It's a perfect trending market as of now. Yes, the brutal corrections are seen in between, but the trend remains positive. So yes, we are expecting at least the positive month, which is the October month. And I think on Nifty, till the time 19,300 is taken care of, I think we should adopt the policy of, the buy on dip, and the Nifty can head towards again 20,000 to 20,200 kind of levels in the month of October to November.
All right, that's about Nifty, but what are you envisaging on the Nifty Bank Index? It has been trying to make a comeback, but hasn't really been successful at that, Kunal. So what are the next levels you'll be watching out for on the Nifty Bank Index?
Almost similar formation is same even on the Bank Nifty chart, Nandita. And if you look at the overall formation, sideways consolidation since almost 5 months now. Nifty Bank has a strong support of 43,700, which is almost 600 points down from the present level. This is a consolidation zone. But again, from here, if Bank Nifty bounces for the month of October, we can see the levels of 45,500 to 46,000 again. And the best pick out of this entire segment can be HDFC, which is available right near to the support.
All right, hold that thought, Kunal. We'll come back and talk about specific stocks with you. But let me also bring on board my next guest for today. Joining me is Ashutosh Mishra, Head Research Institutional Equity at Ashika Stock Broking. Great to have you on the show, Ashutosh. First of all, I want to ask you, we saw crude surge around that $97 per barrel mark, in fact, hurtling towards the $100 per mark, now, per barrel mark. We saw ONGC, Oil India and the likes of HOEC clocking in a very handsome rally in yesterday's session on the back of that. Do you think these stocks are now in the sweet spot and perhaps one should look at some of these stocks from a long-term perspective now?
Yeah, thank you, Nandita. Surely these stocks are in a very good territory given the crude prices uptick is there, and we are not finding any solution coming out from the geopolitical theater on this front because crude price has a lot of impact from the geopolitical side, and there is still a lot of stalemate is there between OPEC and US and even Russia-Ukraine war. So probably crude price will remain at elevated level, and earning of these companies will be in positive territory given the business mix which they have. So we will be seeing some more positive move in these companies out there. But at the same time, there will be a negative impact of the higher crude price felt on the other corporate earnings and as well as inflation part, especially on the global market. But
Right, I want to talk to you about the IT stocks now. Of course, yesterday Accenture gave a pretty bleak outlook, but a couple of days ago we had a positive report coming in on IT stocks, and most of the experts also believe that the last quarter of FY24 is when we can see some green shoots, and FY25 in fact is expected to be a year of recovery for IT names, right? But would you say that the bleak outlook from Accenture is already priced in, or do you think that sentiment would once again turn negative when it comes to the IT pack?
So if we see true part of the IT story is happening in India. When we look at the global economy, we are clearly finding a lot of problems is happening. And when we try to understand what will be the impact on the order flow to the Indian IT company, we sometimes get suspected whether they will be continue to receive same type of order which they are receiving from the last 6 quarters. In my view, Accenture result is fairly priced in. This time when we are going to have a commentary from the management from the IT companies, we are going to get more of a neutral to positive commentary from them, and probably the way things are panning out in the US economy, and if we get some positive news from the European side too, then we can see some more uptick in IT stock from here. Valuation are quite reasonable at this point of time, and given the overall opportunity which we have, we clearly see that it is time to gradually accumulate the IT stock at this level.
All right. I also want to get in your thoughts on the paint companies. I think I should have actually highlighted it before speaking about IT. But paint firms, Berger Paints yesterday came under fair bit of pressure. Of course, there is the rising crude prices that could be a headwind. But of course, there's competition concerns also, given the fact that Grasim is, of course, entering into the market and it's aiming for the second position. So that way, Berger is, is one company that will bear the brunt of this competition pressure, right? So going forward, how do you view Berger Paints and even Asian Paints for that matter? Even that stock had come under a fair bit of pressure when Grasim announced the entry from the fourth quarter of this current fiscal, right? So how do you view the paints sector as a whole?
In my view, paint sector will remain a laggard at this point of time. There are more of industry headwinds like the higher crude prices as well as the increased competition. Not only Grasim, but JSW is also entering into that space. And these are the large corporate which have proven track record of building very good businesses over time. So the sector is undergoing a lot of changes at this point of time. Sector headwinds is also there. The Berger as well as Asian Paint, as a company, they are very good. But if you look at external environment is clearly indicating that we need to be a little bit cautious on this space.
All right. I also want to get in your thoughts on the PSU banking pack, especially the mid-cap PSU banks, the likes of Indian Bank, UCO Bank. All of these stocks have seen a very good run-up. Even yesterday, at least in the first half of the session, despite the weakness, some of these PSU banks were holding up. So would you say that there is scope for more upside, when it comes to valuations as well? Do you think they look expensive now, or, is there more upside left going forward? How would you approach the PSU banking pack?
So most important thing which is happening in the banking space at this point of time is the loan growth has revived quite sharply. And when we have seen the revival of the loan growth quite sharply, the PSU bank is also getting benefit of it. Earlier, we used to see the relatively very low growth in the PSU bank compared to the private bank. But if you look at the number of the last 5-6 quarters, PSU bank is also able to grow at a relatively good pace. And the benefit of that is clearly reflecting into their P&L statement too. Number one. Number two, what is positive happening in the PSU bank is that they are able to deploy their excess liquidity which was lying into the debt security to the loan security, which is relatively higher earning. This trend continues. And in this trend, when we are talking about India becoming a part of the global bond index, and relatively local inflation of India is not hurting us, and RBI is on the pause mode at this point of time, is giving some relief on the yield front. So whenever they are shifting this fund from their investment to the loan asset, they are also booking some part of the treasury profit out there. So the mixture of these two things clearly indicate that next 2-3 quarters for the PSU Bank will remain good. On a valuation basis also, some of the PSU Bank are still trading at a much deeper discount, and the float is also quite low given the government holding is quite high in these banks. So I expect this rally in the PSU banks to continue because there is a very less negative news and more and more positive news which will be coming in.
Right, more upside left or room for more upside in PSU banks going forward. But last question to you, Ashutosh, what's your thought on MARUTI? Given the fact that we've had very positive views from brokerages, in fact, growth levers also in place. But this morning, we have a fairly negative report coming in from CLSA on MARUTI. It has a sell rating. Target price has been raised, from CLSA's point of view, but it's below the 10,000 rupee mark. A couple of days ago, we had DAM Capital come out with a very positive report and had pegged a target price of 12,400 on MARUTI. But CLSA believes that the momentum is unlikely to sustain, given the fact that there is competition and competition will be scaling up its launches as well. So going forward, what is your own view on MARUTI? Do you think, the margins are sustainable? Do you think growth levers are in place and that MARUTI could only head higher from here? Or would you concur with CLSA's view and say that perhaps margins are not sustainable going forward?
So I have a bit of neutral view at this point of time on a MARUTI. Stock has seen a very sharp run-up in recent past. But if you look at two important factors, one is people talk about the market share loss of the MARUTI. Given the very high market share, probably they will continue to lose market share a little bit. But on absolute term, MARUTI is growing and delivering very good numbers. In next 2 months also, you are going to get a very positive data from the MARUTI, given the way things are panning out. And especially SUV side of the business is picking up for the MARUTI. So that is a very positive part of it. Cost of raw material has also softened for them, especially steel side of it. If you look at, that is not any negative surprise coming out from them. So there will be more of a positive inflow from that. But yes, when we try to look at the competitive landscape, the market share loss, it's indicate that probably MARUTI may not be the torch bearer of the passenger vehicle segment, which was there till a few years back. Given they are also a bit laggard in the EV segment out there, and they are trying to put very different picture that Mr. Bhargava is trying to put very different picture the way EV will evolve versus the current vehicle portfolio which they have. So we need to look at it from a not so negative angle. I clearly see that there are positive part of it, but I'm not very negative on the company. But given the current sharp run up, I will be currently having more of a neutral view on the MARUTI.
All right, a neutral view on MARUTI coming in. With that, Ashutosh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to carrying forward with the conversation with you sometime soon rather.
Thank you.
Well, with that, let me go back to Kunal and talk about specific stocks. Kunal, MCX in focus this morning, given the fact that, the markets were keenly awaiting for the launch of the new platform on the 3rd of October. But this morning, there's news flow that SEBI has advised the exchange to keep this new platform in abeyance for now. The stock has run up 20% in the last 5 sessions itself. This bit of negative news, do you think this will have a rub-off impact and perhaps we could head lower from here? And what are the levels you'll be watching out for on the charts?
So, if you look at the historical chart of MCX, the high somewhere was made near to 2,135. That was on the October 2021. And now again, we are back to the same level. And now we are witnessing some kind of negative announcement coming in. So for time being, I think 2,100 level or that particular zone will act as a resistance for the counter. But yes, the trend is intact. Trend is really very strong. So by any chance, the counter comes back to in 1900 to 1925, I think one should think of accumulating the counter. But for now, at this level, I would not really be a buyer. I'll wait for some kind of correction to accumulate the counter.
All right, wait for correction to accumulate the counter. Next stock on my list, I think let's take up some viewer queries at this juncture, given the fact that we have a couple of queries on banking names like HDFC Bank and Kotak Bank. Saurabh Gupta wants to know your thoughts on these two stocks. HDFC Bank, as we all know, has come under a fair bit of pressure. Do you see more downside, and would you advise investors to actually load up on shares at these levels, or do you think wait it out for some bit of recovery to kick in?
So, at the beginning of the show, while discussing about Bank Nifty, the first stock which I spoke was HDFC Bank itself, and the only reason being that from November 2022 so far, this counter has made a bottom near to 1500 mark 3 times. In fact, this is the third time where the counter is reaching near the same level, 1525. Day before yesterday's, the bottom was 1515. I think this is a perfect risk-reward ratio for the positional buyer, even the swing buyers. One can initiate a buy at the present level itself. The stop loss on this will be 1490. And from here, if the counter bounces back, I think 1575 to at least around 1600 can be the first target, followed by 1625, 1630. And when it comes to Kotak Bank, again, the formations are really impressive. Near to the support itself, one can initiate a buy near to 1725. The stop loss will be 1690, and the first target can be 1820 to 1825.
And what about PNB, Kunal? This stock, of course, has been on a tear along with other PSU banks. Room for further up move? What are the charts saying on this one?
We have already witnessed a massive rally, and if you look at the levels from June 2023, the counter has rallied from 50 rupees to almost 80 rupees. As of now on the charts, it's showing negative divergences on the RSI also, and if you look at the formation, it's a rising wedge, which is a bearish formation again. So considering all these observations, I think I would stay away from PSU banks per se, and especially PNB. I think this counter should come near to 72, 73 mark. We'll definitely rethink of accumulating. Trend is definitely intact, but at this present level, I would not be a buyer. I'll wait for some kind of correction coming in.
All right. We had a query coming in on PNB from Mohan. I hope that answers your query. But let's take up another query. Then Naveen wants to know your thoughts on HUDCO. I think HUDCO every other day has been, rallying quite a bit. In fact, would you call it a breakout stock, and would you advise investors to ride the momentum when it comes to HUDCO?
See, again, Nandita, if you look at the recent rally, it was really amazing. The stellar performance is delivered by this counter in last 3 to 4 months itself. But if you look at the historical levels of September and October 2018 and 19, the highs were somewhere near to 90s, and now the counter has reached near to that zone again. So for now, I'll stay cautious. If someone is already long, one can keep the position open with the stop loss of 81. If the counter manages to close below 81, I think one should book out the profit. And the further upside can only be if the counter breaks above 90 levels. So for now, we'll stay away from this counter. Advisable to book the profit if the trend turns negative below 81.
All right. Another stock query that we have is coming in from Debu K. Wants to know your thoughts on Cummins India. Over the last 1 month, the stock hasn't done much. Last 5 sessions as well. Just about 0.3% of gains, and yesterday also I think it came off its day's highs and ended just about near about the day's low. If somebody is holding on to this stock, how should one approach this? How should one play this stock going forward?
See, on this Cummins India, again, for the entire year of 22 and the half of 23, we saw a perfect higher top, higher bottom formation, and this counter was a trending counter. But recently, this counter has started making lower tops and lower bottoms, which is a kind of a worry. For this day, that's on Friday because it's a weekend, so we'll just wait for a day and see the closing. If the closing turns near to 1650, we'll hold on for a week. If the closing is below 1650, I think one should book out for the time being and wait for the correction to come and let the price come near to 1450 to 1475. We'll revisit. But as of now, I would not really advise to catch the falling knife. Even if it has to go up, it has to enter into the sideways consolidation. So we'll wait for some clarification. But for now, the consolidation, the support is at 1650.
All right, 1650 is where the support is at for Cummins India. But let's take up a query on Zydus. Udesh in fact has written in, he's saying that he has been making 44% profit on his holdings. And he wants to know whether or not he should, hold on to it or sell out of it, given the fact that just last month, obviously, he was making a profit of somewhere around 60% or thereabouts, but he's missed out on, booking profits at that point of time. And now, if you look at Zydus, over the last 1 month, it has been a loser and lost somewhere around 5% or thereabouts. So now, should he be booking his profits or should he hold on and, wait for his profits to go higher before booking out of the stock?
So I think we are referring to Zydus Life Science.
Yeah, that's correct.
That's correct, right? So on the formation, again, it's a sideways consolidation counter for now. Weekly chart is showing a perfect uptrend. I think one should stay invested with this. And the stop loss for now should be around 585. If the counter manages to close below 585, I think one should take out the profit. But otherwise, this sideways consolidation may enter into an uptrend because the trend is very much strong on the weekly chart. So hold on to it with the target of 675 to 680 in mind for now.
All right, that's the view. Hold on to it is the call. Hope that answers your query. But let me take up a query on Equitas Small Finance. Balvinder Singh wants to know if there is, any room for an investment at the current juncture. From a medium-term to long-term perspective, how would you advise him to go about it?
Absolutely a perfect trending counter. In fact, last entire month, it was in sideways consolidation. The immediate breakout on the chart is at around 91. Manages to close above 91. I think it can show us the levels of 105 to 110. So yes, one can definitely consider this. But for now, just wait for the breakout of 91. If it closes above 91 with the stop loss of 85, one can definitely add the counter. The targets can be 105, 110. And then we'll keep trailing the stop loss because the trend is really very strong on the counter.
All right, I think we have just about time for one last query. This one is coming in on Tata Motors from Puneet. Wants to know your thoughts. So at least for the short term, what kind of targets you'll be watching out for on this stock?
See, Tata Motors is turning a little weak, and the reason being that on 1st August, we saw the high of around 650, and the similar high was seen again on 20th of September near to 650 itself. So it's kind of double top formation for now. The confirmation is definitely pending, but at this point in time, we should be extremely careful. The immediate support on the counter is at around 605. Which is 10 rupees lower. So if our viewer is little comfortable holding the position, maintain the stop loss of 605, closing below 605 would trigger this entire negative trend. Otherwise, the sideways consolidation may continue on the upper side. I think 645 is the level to watch out for as the consolidation resistance.
Right, one last talk I want to take your views on is Tech Mahindra. Yesterday, of course, it was the top loser on the Nifty, and just a few days ago, we had a Morgan Stanley report wherein they had, downgraded Tech Mahindra given the fact that it has already run up quite a bit and that valuations have become a little expensive when it comes to this particular stock. So, for the next week or perhaps before the earnings, how would you play this stock?
See, overall in the IT space, I'm very bullish. The only reason being the counters have already shown the correction of 30 to 35% in the past. It entered into consolidation and now making a higher top, higher bottom formation. So yes, on the weekly chart, though it is looking negative as of now, but the trend is positive. I would continue holding this counter. In fact, we are already bullish on this counter. We have discussed multiple times in the past also. The immediate support on the counter is at around 1205. With that, one can think of accumulating also. And I think this trend might continue till 1425 to 1430 levels.
All right. So scope for more upside when it comes to Tech Mahindra. With that, we've come to the end of the query segment. But Kunal, what are you flagging off for our viewers this morning with respect to stock recommendations?
So, Nandita, here I'm going to discuss about those couple of FMCG counters which are in sideways consolidation for the entire month of September. The first one is ITC. If you look at the formation of last 1.5 months, the counter has made bottom near to 440 and the top near to 455 kind of levels. So right now it's trading near to 440. One can initiate a buy near to this present level itself. The stop loss on the counter would be 437. And in a week, we can expect the targets of around 450 levels. The second is Britannia. Again, 1.5 months of sideways consolidation. The counter is available right near to the support. So keeping that in mind, one can initiate a buy with the stop loss of 4400. And the target of 4700. And the third counter is New India Assurance. Now, this counter is in a perfect trend, making clear higher top, higher bottom formation since July onwards. Recently, counter came off from 150 levels to 140, again made a bottom and now showing the turnaround story. Keeping that in mind, one can initiate a buy on New India Assurance also, stop loss 135. and the first immediate target being 150 levels.
All right, ITC, Britannia and New India Assurance are the three stock recommendations coming in from Kunal. With that, Kunal, thanks a lot for taking out time and joining in this morning and of course addressing all of your queries as well. Wish you a very happy weekend and a good trading session today.
Same to you. Bye.
Well, with that, we've come to the end of this edition of Morning Trade. Looks like we are in for a positive start when it comes to the October series. We'll have to wait and watch at 9:15 for that when the markets open. But, with that, it's a wrap from me and the entire team. Thanks a lot for tuning in. But, of course, stay tuned. Coming up next is Opening Bell. And you guys have a great weekend. I'm out of the studio, but you stay tuned.